Income tax 2020. Other itemized deductions. Come in, relax with income tax 2020. Other itemized deductions. When thinking about our income tax equation, we're thinking about the below the line deductions. We're thinking about our itemized deduction, remembering that we could break our income tax equation into two halves. The first half then being our modified income statement. The second half then being the calculation of the tax and application of the payments and credits to get to the bottom line, that of the tax refund or the amount due. We're looking at the top item here, the modified income statement, comparing and contrasting the types of deductions between the above the line deductions, known as or called at this point the adjustments to income, and the below the line deductions being the greater of either the standard deduction or itemized deduction. We here focusing in on the itemized deductions, noting that we would only be taking them if they go above the threshold of the standard deductions, standard deduction thresholds being based on whether or not you are having, or your filing status, that being single, married, filing joint, and so on and so forth. With regards to the Form 1040, we got the full 1040 here. I know it's a little bit small, but we just want to see it in context. We're going to be down here on line 12, considering line 12, which is going to be the standard deduction or itemized deduction, whichever is greater. The standard numbers or standard deduction amounts are typically to the right or to the left on the form, so you can take a look at them and see how close you are possibly to itemizing. So we're going to be down here on the other itemized deductions. This is on the Schedule A now, so we're in the Schedule A. We're focusing in on just that component for the other itemized deductions. Now note, this is another area that has been severely limited a few years ago, a couple of years ago now, so people might have some ideas of things that could have been possibly included in other itemized deductions here, but now it's been severely limited in an attempt to simplify the tax code. So we have the other itemized deductions, other from list in the instructions. So note that although the 2020 Form Schedule A is out, and we will be using that when we run our tax problems and our tax example problems, so you can see what it looks like as we populate it, the 2020 instructions are not currently out. Therefore, we're going to push forward with the 2019 information in essence, or in other words, the information we have here is being pulled from the 2019 instructions. We modified it. We're needed for updates to 2020, but remember, it's basically pulling from 2019. If you have questions on it or in a gray area as you go forward, then of course you can look up the instructions. First place to start would typically be the instructions for the itemized deductions, which you can find on the IRS website at irs.gov. The 2020 instructions should be, out anytime, considering that the forms are currently out. Other itemized deductions, gambling losses. Gambling losses include but aren't limited to the cost of non-winning bingo, lottery, and raffle tickets, but only to the extent that gambling winnings are reported on Schedule 1. So this could happen in a couple different scenarios. You'll run into this from time to time if you do enough tax preparation, and you might have a situation where someone won some money. They don't gamble a lot, but they went on a vacation or something like that. They decided to gamble. They won some money, and that money, then they got documentation for it, like a W-2G or something like that, saying that they have income, and it was reported to the IRS, of course, and they have to then include that as income on Schedule 1. And then they're going to say, hey, I had a lot of losses too, because coincidentally enough, there was those losses before I won the money. Well, then you might be able to deduct them, but you can only deduct them on the Schedule A as itemized deductions, and only to the extent of the gambling winnings. And therefore, if you do not itemize, if you don't itemize on the Schedule A, if you're not going to benefit from the itemized deductions, you won't have a benefit from it. So if you're in that situation, the person who had the losses may not have documentation for it. If they don't gamble a lot, they might not have saved, their losses. They just coincidentally won something. The second situation you might have is someone that does gamble a lot. And if they do gamble a lot, then they're going to ask you, well, I have a lot of losses. I got these winnings, but I also have these losses. Can I take advantage of the losses? Can I deduct the losses? And in that case, if they do not itemize, then it may not be worthwhile still to collect the losses, because you might not be getting a benefit from them unless there's a substantial amount of winnings and it kind of pushes you over the threshold, if that's the thing that pushes you over the threshold to be able to itemize. If they are itemizing already then, and they gamble a lot, then they probably want to save the losses that they have, so they have evidence of the losses, because then they possibly could be something that can be deducted on the Schedule A, but only to the amount of the winnings. So we'll take a look at that in the example problem in a future presentation. So then we have the casualty and theft losses of income-producing property from Form 4684. We have the federal estate tax on income in respect of a decedent. So this is kind of an unusual situation. The estate tax, remember, is like the death tax. Someone dies and they tax them, right? So if you have the federal estate, and that would only happen if their income or whatever was over a certain threshold and so on. But in that kind of situation, you could have a deduction for the federal estate tax on income in respect of a decedent. So the tax of the income. And then a deduction for amortizable bond premiums. For example, a deduction allowed for a bond premium carryover, or a deduction for amortizable bond premium on bonds acquired before October 23rd, 1986. Again, somewhat of an unusual deduction there. Other itemized deductions: an ordinary loss attributable to contingent payment debt instrument or an inflation-indexed debt instrument. For example, Treasury inflation protected security. Again, somewhat of an unusual circumstance there for a deduction. You don't see that often. Deduction for repayment of amounts under a claim of right. If over $3,000, you could see publication 525 for details there. Certain unrecoverable investments in a pension and impairment-related work expenses of a disabled person. So again, most of these things are items that you don't see that often. One of the things you see most often, basically, in this category, in my experience, is the gambling losses.